Welcome to Common Sense Investing. My name is Cameron. I'm here to talk about microcap stocks because that's what I like to do. Seems like my video is working, seems like my audio is working. Fantastic. I love it when technology works. I love it when earnings season is good and people are making money, especially when it's like August. I mean, what better feeling is there to be sitting here having a nice relaxing summer, enjoying the weather, getting out with friends and family, and making money when your favorite stock reports earnings? That's absolutely fantastic. And that has been happening. I mean, one of the things that I've kind of been preparing myself for was I didn't know what was going to happen in July and August as far as earnings. All the chaos, all the different tariffs and Trump and trade issues and everything else. We weren't sure how the market was going to go, but there has been a few stocks that have reported very good to incredibly good earnings, and we have been seeing them go up. So that is absolutely fantastic, and we are here to talk about that today. Not with this slide. I'm getting ahead of myself, actually. So, as usual, I have a presentation to talk about some of the companies reporting earnings. We're still in Q2 earnings season for a lot of these microcap stocks, but don't hesitate to comment. Heckle me, ask questions. What stocks do you want to talk about? Because after my presentation, I'll stick around for some Q&A and we'll talk about some stocks other than just the ones I want to talk about, right? But basically, this is an interesting time, risk versus reward, because it is earnings season. Like I said, normally I use this earnings season to gather information to make decisions down the road in the more important quarters. Q3, full year earnings on Q4. What's the company going to do next year? Q2 is supposed to be like an information gathering type season, but so far it's been pretty bullish, right? We also have some catalysts coming up. It's good to talk about these. I always say to have a strategy. Even if the strategy is wrong, it's better to have a strategy. See if you get it right, see if you get it wrong, reevaluate, do it again next year. And that's including some of the macros, right? What I'm looking at this year, some of the upside catalysts. We do have the fall investor conferences coming up from late September to late October. So small cap discovery, September 29th and 30th, I believe. I am going there in person. I will be at small cap discoveries in Vancouver this year. And then we have Planet Microcap in Toronto. I believe that's around October 21st or something like that. We've also got a few other smaller investing conferences, which is absolutely fantastic exposure for these tiny microcap stocks. And it's really, a second chance for some of these stocks to grab investor attention, but also, try to recover share price in some cases, try to get a little bit more volume, try to get a few more eyeballs on the stock. Because after that, there's really nothing until, at least for me, in my opinion, until full year earnings season, or at least the expectations for full year earnings season. I know a lot of people in Q3 can start to round out those models and try to, is my thesis correct this year for this company or is it incorrect? Make some decisions. And then I'll be looking for the next stocks, the next batch of best stocks for 2026, potential inflection point winners. As far as downside catalysts, we've got tax season. We always see selling during tax season, right? So right around here, mid-November to mid-December, it's not just the bad companies. A lot of people have misconceptions that people will simply sell their losers for capital losses, but a lot of people also sell their winners for capital gains to balance out those capital losses. So you get this really surprise buying opportunity in, stocks that are already beat up, stocks that are already cheap tend to get a little bit cheaper, but also stocks that are absolute bangers, up 200, 300, 400, 500% on the year. Those tend to get beat up a little bit too because people are looking for those capital gains to balance out the capital losses. So again, I think the theme of my presentation today is second chances. And I'm going to talk about that a few times about how companies give us stocks, give us sometimes a second chance to buy them, sometimes a third chance to buy them, multiple opportunities. And even when you think maybe you missed out on a stock, it always seems to give us another chance to buy. When I highlight this a little bit more, if you want more information, I do have a Substack article, Convincing Investors to Become Shareholders. That is talking about these fall investing conferences, and it talks about, number one, how important they are to microcap stocks, but also what I'm personally looking for. I think it's worth a read because I wrote this article for Planet Microcap Vegas. I think my top 10 stocks, I think 8 out of 10 of them absolutely crushed it. So people were obviously looking for some of the same things I was looking for. And the link to this article, Convincing Investors to Become Shareholders, will be down below in the pinned comment after I'm done recording this video. Build a strategy. It's okay to be wrong. So basically, this is simply a visual representation of my macro strategy moving forward, right? We're in a lazy summer. This is typically when I like to do research and potentially buy stocks. I like to buy the quiet, sell the riot, and typically the summertime is the quiet. It's been a little bit busier this time than expected. We've had a later than normal bull run in microcap stocks. Typically Q3 and fall investor conferences are typically when we see a rise in stocks, at least the good ones. More eyeballs on the stock, more buying pressure, more volume. Hopefully, if you find the better companies and other investors agree with you, then we get that mid-November to mid-December tax season. And also people have less money because for a lot of people it's Christmas, buying gifts, and they're just not as investing as much. And then after that, we get into that exciting part of the year, which is cool story, tell me more. What's next for this company? This is when we start getting excited, not only about full year earnings this year, what the company did, but what is the company going to do next year? And you see a lot of people switch over from, 2025 valuation metrics to 2026 expected. Or even at this time, if people really want to get ahead of themselves, I start to see 2027, 2028 expected valuations popping up. Think it's a little crazy myself, but at least this is kind of that fun time where we get to, figure out the next journey, the next story for our favorite companies, our favorite stocks. Of course, there's always volatility here. Trump and the world right now is basically meeting to talk about Russia and Ukraine. Is the U.S. going to have rate cuts? We don't know yet. So there's a few other volatile factors in there. Now, before I start to talk about a few specific stocks, I do want to say not financial advice, right? I'm not your financial advisor, and this is not a solicitation to buy, sell, or hold any of the stocks that I talk about. And I mean this. I say this all the time. This isn't just a disclaimer for me. I mean this. I don't know anything about you, your risk tolerance, how much capital you're working with. There's a big difference in how you invest. If you're a large capital investor versus a small capital investor, high risk tolerance versus low risk tolerance, can you afford to lose money or can you not, right? There's simply too many questions. So these videos are just entertainment, how we communicate about stocks. So you could take maybe a little piece of me or a little piece of some of the comments here and learn and grow and become a better investor. So these videos are just how I invest and not how to invest. In saying that, this chart was stolen from Ryan Telford, who is a fantastic investor, quant investor, basically putting out data statistics for everything that I've felt qualitatively my entire life investing. Ryan Telford has data for us, so please go follow him on X. And this is the chart for return drivers for 10X stocks. I've added some things here, right? One of the things with some of Ryan's charts and data in general is it tends to simplify things, especially investing. But one of the drivers for finding a 10X stock is sales growth. With that sales growth, that moves into profit margin growth. And I feel like this is the easy part for new investors. This starts to become the harder part because here you have to read earnings. You have to interpret earnings. It's the most misunderstood part of microcap investing. It's not just about being the story stock and getting high growth. It's about getting that profit margin growth, being able to find that in the earnings. And then if you can get those two things, sales growth and profit margin growth, typically what you get is then multiple expansion. You have people willing to pay a higher price per dollar of share for a company today than you did yesterday, right? People are willing to pay more for it. And this is going to be a common theme coming up as well throughout this presentation, because you do have stocks like this, right? Zoom Technologies. This is a screenshot from my video, and I introduced Zoom before this, but this was from my video, 5 Best High Growth Stocks for 2025. Zoom Technologies at the time was 80 cents Canadian. Started out as, don't know why that J's there, started out as 8 cents Canadian, benched up to 16 cents Canadian, then went to 45 cents Canadian, then up to 80 cents Canadian. And I guarantee you, like, the number one comment I got from people about Zoom at the time when they were at 80 cents is, I missed it. I just missed out on the stock. I missed it. It's gone up so much, hundreds of percent by this time, right? 1,130% year to date when Zoom was at 80 cents. And investors were saying, I can't buy it anymore because it's already gone up too far and I missed out. And I generally caution people against that, right? Again, the missed out crowd, it provides buying opportunities. Most stocks do. You know, Zoomed here went up significantly. People thought they missed out. It continued to go up. There was this large crash here right down to the end of April, down to what, 60 cents. And I was part of the cause of that. I was concerned, obviously, that one of Zoom's largest clients was it was at Temu or Shein or both, right? And with the Trump trade tariffs, but also with their reduction or elimination of the de minimis exemption, which is, you know, allowing those smaller products to cross the border without tariffs, I thought there was a lot of risk in Zoom. They proved otherwise, and again, in earnings, they justified that not only what they said was going to happen was we are going to get revenue from other locations in the world. They actually proved what they said through earnings. It started to go up again. People are saying that, oh no, I missed out again. And now here we are sitting with Zoomed at $2.10 Canadian. So this should be a case study. Somebody needs to do a case study at some point with how many opportunities Zoomed has given investors to buy it over the past year. You know, Ryan Telford talks about this, you know, it just seems so easy. A fast rise, 10x in 1 year, but it's not without its bumps. Zoom drew down 50% in Q1, testing many investors' willpower, but this is not uncommon with high return stocks. The 10x path is often not straight up. And so this is another classic example right here with Zoomed. Of course, they did it with spectacular earnings. And I just completely skipped that slide. So just give me a second here to figure out what's going on. There we go. Yeah, I mean, 66% revenue growth on top of somewhere between 233% and 303% increases to net income, income per share, basic, diluted, and then adjusted EBITDA. So absolutely fantastic earnings. And this, I mean, this is exactly what you're looking for if you go back to this slide where I started off here, right? Is you should see sales growth from Zoomed, yes. Profit margin growth from Zoomed, absolutely. We should start to see multiple expansion growth, right? But one of the things that we have been talking about is that that's not necessarily the case. So Ryan Telford points out here, multiple expansion for Zoomed, it's actually been flat, potential driver for future return. So despite this enormous gain from Zoom Technologies going from 8 cents Canadian per share to $2.10 Canadian per share, right now it's still sitting at fully diluted shares 9.3x. And I mean, what is the peg on that? If you just say 50% growth, because it's tough to go any higher because the peg just gets so unreasonably tiny, right? That you just have to wonder how high can this stock go? And that's what we're talking about, right? You know, every once in a while, these companies give you these opportunities. And even recently with Zoomed, I think investors should point out here, or at least I'll point out to investors, is that all of the people that invested in Zoomed, good work. Congratulations. Absolutely brilliant move at 8 cents, at 16 cents, at 45 cents, at 80 cents. I do actually think one of the most intelligent purchases of shares that I've seen all year was probably Zoomed after they reported earnings. They reported earnings here at around $1.50 per share. Earnings were absolutely fantastic. I just showed you earnings. We're talking about 60-some% growth, 200 to 300% increase in net income. Share price went all the way up here. I think it was $1.85 or $1.88 Canadian. And then the day traders sold it. And, you know, I don't know what they were thinking, but share price went all the way down to, I think, $1.58 or something ridiculous like that. And I think the investors that picked up Zoom right here, that was absolutely brilliant. I mean, it was so incredibly de-risked at that point, knowing the earnings with zero risks from earnings and seeing how good the earnings were and still being able to pick up shares right here. I was just absolutely amazed, and congratulations. I think this was such an amazing risk versus reward profile right at this moment, right after earnings, and really comes back to that theme of second chances, right? You never, with microcaps, they always give you a chance to make money. Maybe you didn't buy at the bottom, but you could see here on earnings day, August 14th, 1.5 million shares of volume, and it actually hit a low of $1.58. I mean, what is this? It actually opened higher. It opened at $1.59, ran to $1.83, dropped at $1 to $1.58, and closed at $1.66. And you look at the opportunity throughout this whole day, now that it's gone up here to a 215 high and a close at 205. Absolutely fantastic for Zoomed and its shareholders. So congratulations. Congratulations. It sounds slow after watching you at double speed to catch up to the live speed. I'll try to talk faster, but then sometimes people won't be able to understand me. I'll get complaints in the other direction. This is Clean Tech Industries. Not exactly as fantastic as Zoomed, but not bad. So one of the things with Clean Tech Industries right now, higher highs, higher lows, a little bit of volume, and that was on earnings. So this is pretty good. We did have some buying. I just introduced this company recently on 3 opportunities in Microcap's video. I think it was the second stock I introduced. You know, you see these trend lines of higher highs, higher lows. You get a little bit of buying up above the trend line. That's a good sign. You get a little bit of volume on earnings after a significant downward period. That's a good sign. So let's take a look at Clean Tech's earnings. The highlights were good anyway, right? Revenue increased 39%. That's a pretty significant increase. Gross profit increased by 39%. So expenses aren't, you know, going up faster than revenue. Net loss narrowed to 457. That's not much of an improvement. There are some reasons for that. But again, you know, if we're looking for revenue growth and profit margin expansion, now I know adjusted EBITDA is probably your weakest profit margin expansion. A lot of people don't like adjusted EBITDA, but welcome to microcap stocks. This is used pretty extensively, up 241%. So some revenue growth, some profit margin expansion, pretty good highlights. And the wording from the CEO is actually pretty positive as well. So that's not bad for Clean Tech. And I think that's why I got a little bit more buying volume. I actually thought underlying earnings were a little bit meh when I first looked at them. I mean, they had adjusted EBITDA of $2 million on the first 6 months, but only $778,000 for this quarter. So sequentially, their adjusted EBITDA is down from last quarter. A lot of things were actually down from last quarter, but I would like to point out, sometimes it's tough to tell with some of these smaller companies, whether they're cyclical or whether they're just lumpy with timing. But at least the comparable quarter for Clean Tech Energy Clean Tech Industries, sorry. I'm so used to say technology. Seems like half the companies out there are something technologies company. This was their quarter from last year, so 2.4 million. This was very beatable. That's why their revenue growth was up so high. But it is typically their low cycle quarter. So they actually crushed it. If this is a cyclical company and this is normally their slowest quarter, they actually did very well. And hopefully, if it is their lowest quarter and we see this normal trend throughout the rest of the year, like they saw in 2024, then a little bit better than I expected. So, I kind of gave Clean Tech Industries a meh, but maybe slightly better than meh. D-Box. This has been neck and neck with Zoomed, and this shot up my channel quickly, right? I had multiple times looking at D-Box. With their previous CEO and management group, there wasn't a lot of growth. I think they had 8% growth last year, mostly focused on cinemas, like watching movies, basically. I hadn't heard about their arcade division yet, and I wasn't that bullish on D-Box Technologies. But once I heard about, the F1 arcade, and once I looked at some of the movies data, I became bullish pretty quickly on D-Box. And again, the theme of this presentation is these companies just seem to give you second chances and sometimes third chances. I think most people that discover D-Box Technologies, see how most companies are named technologies? It's hard to get technologies out of your mind. But I think most people that discovered D-Box was right in here. And I think a lot of people have become fans in a hurry. It reported earnings and it has been up, up, up. I always tend to have this conversation of, what drives share price? Is it fundamentals or is it the story? I think it depends on the stock. I think a lot of the times, the accountants, the more quantitative investors will tell you that share price follows the fundamental earnings of a company. And I think it does over the long term. But in the short term, I tend to find that story, the narrative, whether people are talking positively about a company, a stock, or whether people are talking negative about a company, a stock, is what drives share price up or down. And then the financial fundamentals just support or don't support that share price. I will say that D-Box Technologies, you could take your pick. The story has improved. Investors are loving this stock. The new CEO is talking about growth. They have multiple streams for revenue. So share price has been going up because people have discovered this company and the story is very good. And then behind that, coming in right in behind that, is a fantastic earnings with just absolutely outstanding fundamentals, including, significant cash flow for a company with this market cap. So, congratulations to D-Box Technologies. As high as Zoomed went on earnings, you remember their earnings came out, stock shot up, stock shot down, stock shot up, stock shot down. This is basically Zoom Technologies earnings. You look at the earnings of D-Box. They released earnings right here on the 14th, right? Straight up, benched, straight up, benched, a double benched. This is absolutely beautiful. I know people were sitting here just waiting for that dip, like what Zoom Technologies got. Just didn't see that with D-Box. I don't think anybody's really willing to sell right now, mostly because just every day there seems to be more and more microcap investors discovering this company. This is another new Substack post, and this time is from Canadian Value Investors. I like this one. It's fun because part of the Substack post is actually this person went to the movie theater and watched the movie, is it Weapons, in a D-Box seat. So I like that. It makes it different, makes it stand out. It is a free article. I will post down below in the pinned comment to this article from Canadian Value Investors. Just more and more discovery for D-Box, right? Couple honorable mentions. CorMedix on my channel. This is this guy right here, Common Sense Investing. This was August 7th. CorMedix at the time was down 18% on earnings, and I will 100% disagree with the market. Investors are getting distracted by the acquisition, forgetting about the financial fundamentals. Incredibly profitable with $49 million of operating cash on $79 million of revenue in 6 months and high guidance. That was here, and yes, I did buy shares here. I backed up my statement with cash and bought shares. and it's nice to be right. CorMedix share price is starting to recover, starting to make some significant money on this story. And I've got a video on CorMedix. You can look it up on my channel. I think this company has a lot of potential, as well as Mind Technology. My US stocks are doing really well right now, right? Mind, I actually introduced here. I introduced Mind Technology back at $4. And again, second chances, third chances, fourth chances. I mean, Mind has been going up, but it definitely has not been in a straight line. You could see me celebrating here, you know, when share price had gone from $4 to $5.50 to $6.50, it crashed back down here to $5, went back up to $7. I was still pissed off. Like it's nice to see it's a little higher than 5 or 6. It was up to $7.83, but I said it really needs to get back up to that $10 to $11 price. We are now here. So for all the people that suffered through me yapping every live stream, just about, I was talking about Mind Technology, every chance I could. I actually told people in my Discord, I was like, I'm just going to talk about this stock every week. I just can't, I can't take it. It should not be a $7 stock. It just shouldn't, right? And I keep bringing it up and bringing it up. And here we are back at this $10, $11 price. It was there once before. We'll see if it holds. If it goes down again like this, I'll probably be looking to buy shares. But honestly, I hope they have a good is it Q2? What's their next earnings? And then potentially, well, they're already getting institutional interest. Maybe they get bought out is the question for me. And then finally, we have to look at some companies that are reporting earnings next. NTG Clarity Network still hasn't reported. Apparently, they're going to be putting out a press release soon telling us when to expect their earnings. Covalon Technologies and Kraken Robotics is on the 21st, I believe. And then some other minor stocks, Legend Power Systems, Enwave. I'll be looking for those as well. Everyday People Financial, I haven't looked at yet. Eastside Games Group, I haven't looked at yet. New Path Health and Enterprise Group, I haven't really looked at. But these are kind of B-level stocks for my channel at this point. Right now, I'm very interested in NTG Clarity Networks, Covalon Technologies, and Kraken Robotics. So Stocks and Stones here saying that he is excited for Covalon next Thursday. That is August 21st. It's actually at the same bloody time as Kraken. You can't watch both at the same time. You got to pick one and watch the next one on recording. As far as NTG, again, you know, the theme of second chances and third chances and hopefully fourth chances, because the hope is here. We don't need Q2 to be stunning. We just don't. It just needs to be good enough to hopefully get share price, you know, back on track here a little bit. $2.45 share price after Q2 would be nice. I don't know if they can get there. That's just what I'm hoping for. When you look at their comparable quarter to last year, 12 million in revenue, it's beatable, right? It was a good quarter, but it's beatable, right? And, you know, when you go back to that slide I showed you about revenue growth and then expansion and profit margins, they're getting that. Not at the extent that Zoomed is getting that. I don't know the last time I saw a company like Zoomed that is getting so much growth and getting so much profit margin expansion, but NTG Clarity is getting some. So hopefully Q2 is enough to bounce this one back. Mostly this quarter should just be information gathering, right? What is NTG Clarity Networks going to look like in Q3, but more importantly, end of the year? You know, are they on track? Are they executing what they said they were going to do? Are their margins on track? Are they collecting cash? Very much, you know, summertime earnings season should be a time to gather information inputs here to help us make decisions for later in the year. I think that both Zoomed and D-Box have been pleasant surprises because it's just been a strange year, right? And we've had some good earnings on some good companies, and that has given us some opportunities where we're making money, but we're also looking for the next best opportunity out there. That's the end of my presentation. I'm going to head on over to Q&A and see if there's anything else you want to talk about. Thank you. If you're just here to watch the presentation, thank you for watching. Don't forget to go check out commonsenseinvesting.ca, where I have options to take you to my Discord through Patreon, where we talk about stocks all day. I am researching basically all the stocks right now for the next Planet Microcap, which is in October in Toronto. I've already got 40 stocks researched for that event in Toronto, and I've already got my top 10 picked out so far. I expect them to have about 100 companies attending. I've only done 40, but yes, I've already got some good stocks picked out for that event, and I've already got a surprise one that I'm actually pretty interested in. So thank you for watching, and let's head over to questions and answers. What do we got here? Any chance Doug Diamond will be back to talk more about what's coming for GSI? I haven't asked, and I haven't asked for a few reasons. He's somewhat graduated now, right? So when I do interviews, I am trying, one of the things I should say is, respect to people on YouTube who do CEO interviews. They are difficult. They are time consuming. There's so much work behind the scenes. They are a pain in the ass. People cancel, people reschedule. People don't trust you. Sometimes you got to book 2 or 3 meetings with a CEO before they trust you enough to actually go and do an interview with you. So the amount of time it takes to do a CEO interview is actually enormous. One of the reasons I've done CEO interviews in the past is for companies that simply didn't have discovery. They were fantastic little companies. They were getting absolutely no communication. They didn't have earnings calls. Institutions weren't calling them. The larger YouTube channels weren't calling them, and they were getting no exposure. So, NTG Clarity Networks back at 15 cents. Gatekeeper Systems back when they were 20 cents and nobody knew about them. That's when I did my CEO interviews. Now that a company is $140 million and every day they're talking to institutions and they have, larger YouTube channels calling them for interviews, I'm less likely to do an interview. So I'm less likely to bring Doug back on this channel. If he wants to, I would do it, but it's simply not a priority for me. The other reason is I'm assuming because of some of these contracts he's got, probably some NDAs, he can't talk. He's not going to be able to say what you want him to say. Hasn't even released, I think, a full press release on the $23 million contract. So there's so many questions that investors have. I don't think Doug's going to be able to answer them right now, unfortunately. So my answer is probably not. Sorry, you just got here. Do you think the sell-off in Sabio Holdings today was an overreaction? I believe they're guiding for double-digit growth in Q2 by that measure. Isn't Sabio cheap, or am I wrong? Well, I mean, it's interesting. They're probably, despite their growth, they're probably still more expensive than Zoom if we do a comparison. But yes, I mean, we talk about second chances. That was the theme of this video, right? The problem with second chances is that nobody wants to take them when they arrive because there's too much risk. I showed you those drops in D-Box Technologies. Nobody liked the stock on those drops. I showed you those drops in Zoomed. How many investors bought that drop? 1 in 10? A lot more people were selling than buying. So we always get these second chance opportunities to buy a stock. Right now, because of this massive share price crash from basically 60 cents for Sabio all the way down to 38 cents due to this convertible debenture, almost 0% gain in the past year. So this company has significantly improved in the past year. And because of this convertible debenture, they announced share price is at the same price as they were a year ago. I do like those kind of setups. You get a company that is 1 year better than it was last year. If it's improving, that's up to you to go figure out. And you're not paying a higher price. As far as the convertible debenture, I'm not happy with it, but I understand why they did it. And I do think the market has overreacted a bit. Here's one of those things that I talk about sometimes is that it's interesting to me how people say that financial fundamentals drive share price. But then when something happens like a $2 million convertible debenture, fear takes over and people sell. if Sabio reports terrible earnings for the next couple quarters, people will see, I told you so. That debenture was just one piece of evidence to show that this company is doing very badly. They desperately needed cash, and this is the only way they can get it, and what a terrible company. And it will be validation. But what will happen is you will get some of these companies where you'll be wrong. And this $2 million debenture was, they needed cash to invest in growth right now because they simply didn't have enough cash to balance their accounts receivable and growth. This was the best, fastest way they could get that cash. And if it gets paid off in 6 months, there won't be a lot of dilution. And in the next 2 to 3 quarters, earnings improves and they continue with growth and they continue capturing market share. And before you know it, they're making $100 million in revenue for the year. Then people will look back on this debenture and they will look back at this share price crash that's happened on this debenture and go, why the hell were we concerned? Why did we care? It was a $2 million debenture. It means very little compared to the actual growth in revenue and growth in earnings of the company. So that's 2 different answers without actually answering your question, because the answer is it depends. I mean, do earnings improve from here or do earnings not improve from here? And, you know, it's either going to validate this debenture, people that are worried about this debenture as being correct, or it will prove them incorrect and people will forget about this. It is amazing how many times, like, you know, I always bring back, what is it here? Kraken Robotics, right? If I could actually bring up this chart, if my computer will go fast enough. Sometimes I don't know why these charts don't come up quicker, but it was actually at 95 cents when they did a raise somewhere around here and people gave up on Kraken Robotics. You can't see it because this chart is zoomed out so much, but it actually went from, I don't know if it was here, no, see, it was further out. I won't be able to find it, but Kraken Robotics at one point went up to $1.20. They did a financing. They crashed down to like 95 cents. And, you know, everybody was like, oh, what a shitty company. What a terrible financing. I hate the terms of the financing. It doesn't matter. Ultimately, it's the company earnings that are going to determine the success or failure of the stock. The financing is just one piece of that story, right? So I don't know, but that's kind of my answer. And it is interesting because bad news seems to travel in threes, right? We had Sabio Holdings just do a debenture and crash their share price. And then Hydrate, again, did a $10 million debenture. This is the ticker NURSV. I don't know when this was announced, actually. I just heard about it right at the end of the day, so I don't really have a comment here, but let's go here. It was up. It's up to 325. They just did a debenture. I wonder if we'll see if the share price goes down like what Sabio's did today. Probably not, because people like Hydrate a lot more than they like Sabio. But I mean, there is risk there. I know at least 2 people that I spoke to about that debenture for Hydrate were not super happy with it, but I don't have much opinion on it because I simply haven't had time to read it yet. I was preparing for this live stream. Hopefully I'm back up to speed for you, Aaron. Small loss for the week since last Monday. Nothing new to report, but still liking gains in vertically integrated tech like Zoned and D-Box. Yep, sounds good. Zone Properties is which one is that? I got so many rolling around in my head. They're buying up cannabis properties. Zone Properties is. I have a video on them. I like them. I don't think it's going to go parabolic, but it is. There's so much opportunity. If you don't like paying a high price for some of these stocks out there, there's so many opportunities in these interesting niches. Cannabis real estate, right? Who would think that that's an opportunity, but it's out there. NewPath has been doing well. Those are like the back doctors, right? And NewPath stock has been doing well. You don't always have to chase these famous AI data center plays to make money. There are some interesting little industry sectors out there. Should have called the channel Common Sense Investing Technologies. I should have. Well, what I should have done is left the stupid common sense out of the channel, because I actually started common sense investing before Trump came on the scene and started screaming common sense. And then Pierre Poilievre in Canada came on the scene and started screaming common sense. And then it's like, okay, well, this channel is branded. I have no doubt that some people will not watch this channel simply because it's got common sense in the title, but I like it. But yeah, it should have been Common Sense Technologies or something along those lines. You watching 2x speed to catch up and got the fast speaking on the 2x speed. Perfect. TrueBar is doing a little bit better. People are getting a little bit more excited before earnings finally. That one was getting boring for a while. Let's take a look here. Yeah, see, starting to trickle up again. TrueBar went down. Look, 77 cents, 75 cents for TrueBar. Trickled back up to 78 cents. So again, will we look back here in 6 months, 12 months and say, wow, I mean, this does, I don't want to get hopes up. This is not Zoom Technologies, but it is interesting that it does have somewhat of a similar chart to Zoomed at this point. This was Zoomed back in April, basically. And before they took off, I don't think TrueBar takes off like Zoomed is going to take off or has taken off, but it is interesting to see this definite bottom, a little bit more hope, and we've got a quarter coming up that should be a much improved quarter for TrueBar. One of the impressive things for me for TrueBar is they seem to have gained a little bit of attention from Matthew Martin at Rivemont. Much larger, more intelligent investor than I am, right? When Matthew talks about a stock, I listen. He was invested in, I didn't know it at the time, I never met him, but he was invested in Kraken Robotics before I was. He picked up Kraken at like 15 cents. I think I brought it onto my channel at around 28, 29 cents. And now Matthew Martin's been talking a lot about D-Box, Covalon, and TrueBar. So that's good news for TrueBar to have somebody like that on their side, or at least looking into it. I was hoping for a chance on Mind. I thought it might be coming, and then today happened. Yeah, look, we all are. Like, it's interesting because with Mind Technologies, I was getting so frustrated there for a while because I'm like, this is a $5 stock, it should be 10. This is a $7 stock, it should be 10. And it went up to 10 and then it went back down to 5. And I was getting frustrated. And it's funny when you look back in hindsight, because now I was kind of like you, where I'm like, I just hope it goes to 5 again. I'll just make more money, right? Like if it goes down to $5, $6, $7 again, I'm backing up a truck and I'm buying more shares. And unfortunately, I already have a pretty good sized position, but unfortunately more and more people have been discovering Mind Technologies. They're getting closer to their next quarter, which is supposed to be a pretty decent quarter. And share price does seem to be holding that 950 to 1050 range right now. I was also hoping for a second chance to pick up some name silo on a pullback, but those don't seem to happen with that stock either. No. It might on earnings. Name silo is, again, the chicken or the egg conversation. Name silo has a fantastic story. I am curious to see what happens on earnings with Name Silo. That might be an opportunity for you, because I'm not sure if people, I just made a video on Name Silo and I'm not sure that people fully understand that company. And so when earnings comes out and they have all these things right now that are Cheel Care, Alchemy, this other acquisition that they're talking about that's hopefully closing soon. They have all these things on the go, but it's not revenue today, it's revenue tomorrow. And I'm not sure that people are going to understand that. So you might get your opportunity yet. These microcap stocks always give second and third chances to buy. Can't stay for longer, but cheers and see you all around. Fantastic. Sorry for this. It appears that Canada's economy is decoupling from the USA, or at least continuing to decouple even further. Do you feel that the TSX Canadian listed stocks might decouple as well? Yes, I do. So, I don't want to basically lose thousands of subscribers, but the TSX has done very well recently. It's been keeping up with S&P 500, just a little bit behind it, but that's mostly because it's fairly safe banking stocks, and it's a lot of oil and gas. Oil's down again now. Do we get peace with Russia? Does oil go down further? Anyway, if you look more at like our stocks, microcap stocks, I do feel like there is a little bit of decoupling. Canadian microcap stocks are moving different than American microcap stocks right now. I'm having trouble. I'm pulling back from those Canadian microcap stocks that are truly Canadian. I mean, High Tide is doing well right now, but they're doing well because they're investing in Germany. Their share price was down to, High Tide is a Canadian cannabis retailer. They were down to like $2.60 on their Canadian operations. Now that they're expanding to Germany, they're up to a $4 stock. Enterprise Group is another Canadian company, only in Canada, doesn't really operate in the United States. They were up to, I think, $2.65 Canadian. They're now down to what, $1.50? The Canadian economy is struggling, and we have to be careful on these truly Canadian stocks. As you could see, I've kind of diversified this channel. I used to be, when I started this channel, I used to be a lot more Canadian stocks. Now I have truly some American stocks in this channel. Mind Technologies, Cormedics, Neuraxis. I got a couple more coming up. My American stocks are doing extremely well right now, as well as a lot of the Canadian stocks that I'm bullish on right now. McCoy Global, their operations aren't in Canada, right? The United States and Middle East, North Africa, MENA. So yes, you have to be careful with some of these Canadian companies. If it's a tiny little company, like I don't mind Hypercharge Networks. They operate mostly in Canada, but they have a $6 million market cap. So they don't need a lot of Canadian growth to, you know, go from $6 million market cap to $20 million market cap. But some of these other ones are definitely decoupling. I'm seeing different movement between Canadian and American stocks. Nervous about Kraken earnings, can't make it 20x if you sell at 10x, expect a small dip but not a holy shit moment. Oh well, gambling with your money. I have no idea what earnings are going to be. I've got no guess. I've got no speculation. I don't want to speculate. It's one of the things, the problems with Kraken Robotics is, like I've said now for a while, they basically only speak with retail. So my suggestion is go look at institutional buying, what levels they bought at, when they bought at, what volume they bought at. And the institutions know what's going on with Kraken Robotics. I do not feel like the retail shareholders do anymore. But keep in mind, when you look at institutional buying, they have time horizons of 5 years, 10 years, 15 years, where sometimes us retail investors have timelines of 5 months, 10 months, 15 months, or with some of us, 5 days, 10 days, 15 days, right? So institutions tend to have a longer time horizon view than we do. But yeah, I mean, I'm happy. Kraken's one of the last few like Canadian companies around, and I hope they do well. But definitely the valuation's pretty high. There's more coverage. Another analyst opened up coverage on Kraken Robotics. I forget who it was. Was it TD? And they opened up at $5 price target, something like that. But they're obviously highly motivated to suggest a stock is worth more than maybe it is as well. Join late. Your thoughts on HG, CNSX, Hydrograph, and their industry graphene may not be on your list since I think they're still pre-revenue, but gosh, what a run lately. Yes, so I have to be careful what I say to not get this channel canceled, but I think you could say with 100% certainty that this is not my favorite stock. So this is a highly promoted stock, right? This is Hydrograph. You know, we've all seen this before. Who makes money on this? Now, retail people or anybody who is told to buy here, right, before this happens. But this has been heavily promoted. Look at this, $648 million market cap right now. It was darn near $1 billion at one point, right? It was, what is the high here? 52-week range, $3.72. That was basically $1 billion market cap, $1 billion. Think about that. And they make zero revenue, zero. So think about all the companies. I mean, I was joking around before. At this market cap, you can buy McCoy, this company right now, if it sold its company for $648 million of cash, and they were somehow able to buy other companies at just their market cap. You could buy McCoy Global, D-Box Technologies, Sabio, Happy Belly Food Group, and pick probably 2 others. So you probably buy about 6 or 7 of my favorite microcap stocks with what this company is worth right now, and they make zero revenue, zero revenue. And so what happens with these promotions, despite their name, Hydrograph Clean Power, they are in graphene. I love graphene. Someday graphene is going to take over the world. It's going to be in everything. That is fantastic. I do believe that is going to happen. I've made videos before on Black Swan Graphene and one other graphene company. I'm fairly well educated on graphene, that industry and that technology. It's wonderful technology, but it's like hydrogen. It's going to take years. Every company says we're 1 to 2 years out, and then after 1 or 2 years, they say we're another 1 or 2 years out, and then after those they keep changing these goalposts. It's going to take a decade, 2 decades for graphene to just slowly get adoption and understood, and then used, and then trialed, and then, put to the test, and then talked about, and it's going to happen so slowly. But that's not what investors tend to think about. They tend to think about graphene is somehow going to take over the world in 2026. It's going to be in everything because that's what they're telling me on social media. And oh my gosh, I need to pay $1 billion market cap for a company that makes no revenue. That is not something that I support. This is speculation, this is gambling, and this is like going to the casino. You're going to win. Occasionally, someday, you're going to get that one person who wins the lottery, $50 million on these pre-revenue stocks, and that one person is going to tell everybody else, and the other 500,000 people are going to get absolutely screwed and lose all their money, right? I think, as you could tell, I'm not a fan of lottery tickets either, right? Lotto 49, whatever it is, some Mad Max or whatever, all those lottery tickets, I hate those, right? One person gets rich every couple months, everybody else just throws their money in the toilet. That is my best description of these types of stock promotions. We'll see what happens next. I mean, how long they can keep this thing going. Some of these promotions tend to level out because at this point it's got so many believers, and pretty soon it's going to have a whole lot of bag holders. And there's going to be people talking about how great this company is for the next 4 years, 5 years, because they're holding bags and they're losing money. And nothing motivates a shareholder more to talk about a stock than when they're down 90% and they're stuck, right? So those are my thoughts. I am bullish on graphene. It's just, my God, the expectations that people have. This thing is not going to take over the world tomorrow. This is a very, 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 very slow adoption of a new technology. Decades it's going to take. It's the same with, like I was saying, hydrogen. Remember we had that hydrogen boom? Everybody loved hydrogen stocks. Hydrogen was going to be the new source of energy. I love hydrogen. I do think it's going to take over in certain industries. It's going to take 20 years, right? I don't typically invest, in 20 years, I'm going to be 65. I'm not buying a microcap for 20 return in 20 years. I'm just not, right? I can get a return in 2 months. Thank you. Great commentary on Sabio. You're welcome. Thoughts on NewPath? They just had earnings. Yeah, this is one I haven't looked at. NewPath is a company that I profiled at, I think it was 17 cents in a video, right? And so congratulations to them. I'll have to go look back at the exact price, but it was somewhere like down around here. It was 16, 17, 18 cents is when I made a video on NewPath Health. Again, you have to keep in mind a lot of my YouTube channels, I'm trying to provide a little bit of attention, eyeballs, on some of these companies that nobody has ever heard of before. And NewPath was one of these where, not the fastest growing company in the world, but I saw a little bit of potential. I saw a little bit of improvement, and I just thought this share price was just too bloody cheap. It's now up to 28.5. So that's some significant money for investors who bought on my video. And congratulations. I'm not currently a shareholder. I have not looked at earnings, so I couldn't tell you. My questions would be from my research on this video is, have they knocked down those barriers for continued growth for this company. I know when I made this video, one of my concerns was that I think they were at 92% capacity for the real estate, the properties that they had. And I wasn't sure they were going to be able, basically, how was management going to react to that? How is management going to get over that hump, find some new properties, find some new ways of growing now that they were up in the 90th percentile of what they could get to given the facilities that they owned. Now, maybe they gotten through there. Like I said, I'm not 100% sure because I have not looked at earnings. So my apologies. I just wanted to congratulate New Path. But basically, that's as far as my opinion could go because I have not kept up with this stock since then. Mostly because it's typically not what I'm looking for. Like I typically am looking for, you know, can we all find more Zooms? Right? 66% growth, 200 to 300% growth in net income. You know, New Path, when I profiled it a while ago, I think they were at around 10% growth or something like that. So not bad, but you know, definitely not at the levels that I would typically look for. Regarding gradients and no revenue companies need monies, they often take it from shareholders if they don't have income using dilution. Yeah, graphene I meant. Oh, absolutely. And I just can't get behind that. I've been there, and I think a lot of people have been there. I love listening to some other investors, right? You go listen to like Ian Castle. It's fantastic. One of the top microcap investors talking about his journey in a podcast. And the podcast was something about talking to billionaires. I'll go look for it. I'll post it down below in the pinned comment. And it's fascinating because even Ian was talking about his journey as a microcap investor, where he started with story stocks. Right? He started with stocks like Hydrograph Clean Power and this whole graphene story, where so many microcap investors start with those story stocks. We have a product, it's going to change the world. That's the best stock to promote. If it's going to change the world or save the world, that is the stock you want to promote, right? Forget about this boring stuff like, you know, making tools for oil and gas or, you know, making, you know, Evolution Power Products, which provides power in rural areas. That providing power to rural areas isn't going to save the world. You need a product that's going to save the world. You promote it to investors that don't really know what they're doing, and then you dilute and dilute and dilute for cash. That's pretty much the plan. But it's amazing that even investors like Ian Castle has said that he started there. He started with those story stocks that just dilute retail investors for cash. You learn from that, you lose money in that, you realize it's not just about the story, it's about the financial fundamentals. And then Ian went into mining stocks. A lot of people have done that. Mining stocks, gold, right? Gold is up. Why am I going to find the next discovery? People are always looking for lottery tickets when the reality is that the real money to be made isn't in a stock that's going to go up 1,000% in a week. It's going to be in a stock where you could find a bucket of stocks that can give you 20, 30% every year for 20 years, right? That's the real money maker for me, is that 20, 30, 40% every year for decades. And that's what we're looking for. These people that chase these, you know, story stocks and promotional stocks, every once in a while, you're going to get a winner. You're going to make a bunch of money. You're going to bring that money back down to the market. And just like a casino, you're going to spend it all, right? So be careful with your winnings. Don't get overconfident. I always talk about that. Humble, right? You don't see me out there a whole lot. Oh, look at this amazing 100%, 1,000% returns, greatest investor ever. Stay humble, right? Thanks for another great discussion, for being so generous with your time and knowledge. I'm sure many others appreciate it. Well, thanks for showing up. I'm only here because other people are here. 57 people right now in this live stream. It's a boring Monday in the summer, so thank you everybody for being here. Sorry I'm hanging out with my family and watching later. It's interesting to hear your thoughts on Zoom, Nurse, and D-Box. Look forward to hearing the replay. Thank you so much. Again, you're welcome. That is the last comment, concern, question. Nobody else has any problems. I'm 58 minutes into this stream. Let's shut her down. It is still summertime. And next week, I guess, we'll know maybe NTG Clarity Networks. We'll know about Covalon, TrueBar, when is TrueBar reporting? So a few more companies reporting earnings here. Earnings season isn't quite done. New Path record second quarter total revenue of 23.6 million, up 25% positive cash flows, EBITDA 2.2 million, up 69. Fantastic, fantastic. And that's what I was hoping for with that company is just, getting through that barrier and finding a way to get growth. And it sounds like they have gotten some growth. So that's great for New Path. Webcast on Thursday. Great. Well, maybe I'll go give that a listen. That company's been very successful, and congratulations, because if those numbers sound like share price should continue to go up for a little while longer, right? So good work. I'm glad you like that boring company and not a promoted stock like Hydrograph Clean Power. So fantastic. I will see you again next week. I should say I didn't do a video this week. I was sick. I lost my voice, so I'll have to have a video coming for you this week introducing some more fantastic little microcap stocks to you. And hopefully we'll see you then.